Joining me now for a closer look at what's playing itself out in that market scene is Jordan Toy from Legacy Family Wealth. Jordan, a pleasure. Good afternoon.
Afternoon. Thanks for having me.
So this is not the best start to a week. It's red screens here at home, but even in Europe, what on earth is going on?
I think you're seeing a lot of recession fears starting to rear their heads. So, I mean, even if we look at a week ago, 2 weeks ago, and over the last few months, markets were priced to near perfection, if I can say that. And I think what you're seeing is the market's sort of coming around to the possibility that, you know, a soft landing was almost considered a certainty, let's say a week ago, even 2 weeks ago. And I think the market's waking up to the thought process that the probability is no longer zero of a hard landing or a recession. And we're just seeing some of those jitters and those fears come through the markets globally. And I think that's pretty much what's dominating the moves we've seen on Friday and today as well.
We were so convinced for such a long time, Jordan, that especially the US economy was so strong that there was actually more room to keep interest rates higher for longer if the Fed needed to do so. And then we saw those jobs numbers, those non-farm payrolls coming on Friday. And that was actually a bit of a shock, wasn't it?
100%. And I think that talks to my earlier point, exactly that, of the market suddenly going, you know, we all know interest rates work with a lagged effect. So I think the concern was now, obviously, the September meeting is potentially looking like the first rate cut, but they've not cut now in July. And I think the market's now starting to worry that maybe it's a missed opportunity and that, you know, the earnings expectations and the earnings growth really needs to deliver going forward, considering the valuations we're seeing in the US market. So any little bit of downside surprise, and we're seeing sort of the red we've seen across markets today and on Friday.
Let's talk about earnings. So last week we saw, I think, most of the Magnificent Seven, if not all of them, out with numbers. Lots of disappointments as well. So I'm wondering how markets are trying to, take stock of that. We know that these 7 stocks have really been what have held the Nasdaq up as well as the S&P 500. But in the wake of those earnings and then the macros, what are we thinking here?
So I think it's the only one we need to keep an eye out for, as well as NVIDIA coming out towards the end of this month. That's obviously a big one, but the rest of them, or a lot of them, have released updates over the last week. I mean, we saw Intel, drop significantly. I think their second worst drop in history end of last week. So I think it talks to exactly that the prices are very high and the earnings growth needs to be there. And I think most of the updates we were looking at, were either at or above consensus estimates. So it's not that these recent updates were necessarily disappointing. I think a lot of the forward guidance is what disappointed markets, where that earnings growth didn't seem like it was going to materialize, at least at the level that it needs to justify the current valuations.
And this week, I think we've got more earnings. This time, the other, I think, interesting sector we've seen this year, weight loss and diabetes. I think a few of those earnings out this week.
Yeah, so exactly that. Novo Nordisk and Eli Lilly are 2 big ones that are coming out this week. We've also got Uber. There's quite a few. Rivian, a couple of electric vehicle manufacturers, Lucid, some of the smaller ones. So it'll be interesting to see. Obviously, the healthcare companies are going to be a big one to keep an eye on. Those have also had a strong run this year, as you said, off the back of some of those weight loss drugs. And then Disney's another one to keep a big eye on. That's going to be an important one for the market this week too. And
Jordan, do we suspect that we might see a correction in those healthcare stocks that we've seen with the tech stocks? Because, I mean, that's where the booms have been this year.
I think it'll be interesting to see what the numbers are. It seems that even if you're meeting or beating consensus, it's not really being rewarded, let's say. So it's a tough ask, and I think the macroeconomic events and the sort of jitters in markets and the volatility at the moment are going to dominate things for quite a while. Even if the results are good, I think that might overshadow those results. But let's wait and see. I'm optimistic, though.
Another one we've been watching for a while, and it's just been dud after dud, literally, the Chinese economy. And of course, that's a big part, I think, of what we're seeing in terms of global recessionary fears here, is the fact that China just hasn't shown up the way that we had anticipated or hoped. That recovery story has been uneven, but I'm even inclined to say that it's been disappointing.
100%. I think it hasn't moved at the pace that I think a lot of the world was hoping for. And I think they're battling to get consumption going in that economy. So there's import-export data coming out later this week. I think there was PMI numbers out earlier this morning that we'll have a close look at over the course of today. But I think they're battling to get consumers to spend there. Naturally, if you had a huge amount of your personal wealth in property and that property's fallen significantly in value, you're going to take a defensive approach. And I think they're struggling to get that consumption going in the economy, and they're leaning heavily on their manufacturing sector. And we're seeing that in their trade surplus. So we'll see what the export numbers look like later this week. But definitely, the growth is slow to materialize out of China at this rate.
Another interesting part, and we'll stay in Asia, is Japan. Of course, we saw them lifting rates because they're in a completely different part of the cycle there. Let's talk about that and how that is showing up in markets, Jordan.
So yeah, Japan, when I last looked, not having a great day today. And yes, as you said, very different to the rest of the world, I suppose, in lifting rates. Very different economic situation there. I think what we're seeing is two aspects. So the carry trade, which is essentially borrowing in yen when rates were near 0%, so it's very inexpensive debt, and then taking that, converting it to another currency, say US dollars, and investing in the States at, call it 4 or 5%. Now, when you have interest rates lift and the currency start to strengthen, a lot of those carry trades are now being unwound, and it's just caused a bit of volatility in that market. And I think the other aspect to consider is that a lot of these Japanese companies, their exports become a lot less competitive now that that the currency is strengthening. So some challenges there for sure.
Then let's bring it home. Red screens on the JSE today as well. We have better hopes, I guess, for SA Inc. and our story here at home. But of course, we're not immune to what's happening around the world and even the jitters that we're seeing.
Yeah, and I don't think we're going to be completely spared. I mean, the world economies are very interconnected nowadays. I mean, I think you were talking about earlier Telkom's results, MTN Uganda. I don't think we'll be spared. I think Telkom, even if the results are, and it sounds like the results are quite good, that there's still going to be pressure. And I mean, we're seeing it in the JSE at the All-Z level today for sure.
Well, I'm keen to get to stock picks. First, let's reflect on counters that have found favor with industry peers.
ASML. If you are going to be betting on this, basically, like I said, this tech boom, AI boom continuing, ASML right now on a 6-month basis, is down 6%. It's come down dramatically over the last month because of fears around exports to China, fears around, issues with the, like ability to sell stuff to the Chinese companies and so on, as well as the general, weakness in the tech sector. But if you look at ASML over the last, little while, this is the company that makes the machines that make the chips. If we are going to be seeing lots of global changes, we see a lot of issues happening here. More countries will probably want to have localized production, which is very good for ASML. So that's my pick for the moment.
We like Momentum. It's a local financial services firm, insurance and savings, and the share has been doing well of late. We have seen a pickup generally in the life insurance valuations as the prospects for financial conditions in South Africa improve, lowering bond yields. But importantly for Momentum themselves, they have set themselves a very ambitious strategy, what they call their impact strategy, to improve their earnings significantly into 2027. That's by bolstering distribution, their space, their market share in the wealth management space, attacking some of their costs, improving the insurance business, and then also improving returns in their Indian operation, which is in medical insurance. So I think all those things taken together with the prospects for better growth in South Africa make it an interesting investment opportunity.
All right, keen to get your thoughts on those, ASML and Momentum.
So ASML's, as was noted there, is a sort of a market leader in the semiconductor space, and one of the few, if not the only company at the moment that's able to produce these very expensive machines to manufacture semiconductors that we know are such a critical part of daily life. So I think in terms of barriers to entry, they have quite a dominant market position. It's not something that is easy to do to break into that space. So I think we do like them for the long term. I think there are political risks associated with it. Obviously, the US is trying to put pressure. It's a Dutch company, so the US is trying to put pressure on them to prevent them from exporting a lot of these machines to China. So there are risks, but I do think that market-leading position will take time before anybody else can actually reach that level where they can produce the machines that are of the standard that ASML currently has. On Momentum, broadly diversified financial services business. We obviously, as wealth managers, deal with them from time to time. And, I think that it's a solid business. Their last operational update was some time ago, showed some resilience. And I think from our perspective of dealing with them, they've done well in a lot of areas. And, a good business all in all, I think.
And with that said, which counter are you loving this Monday afternoon?
So the counter I wanted to talk about today is Palantir. It's a software company based out of the US. I'm not sure if many have heard of it, but definitely a growth company in the tech space. They've got a couple of different business areas. They deal with corporates, but they deal mostly in big data analytics and insights gathered from big data. I think the interesting aspect for me is they're also an AI play, but what is the interesting space is that they're on the defense and industrial complex, and they have a lot of business with the US Department of Defense and US intelligence agencies, and it's quite interesting the applications that they are looking at in the sort of military-industrial complex for artificial intelligence, and I think one to keep an eye on for future. It's also, one of the co-founders is Peter Thiel, who was obviously a PayPal co-founder, so some heavyweights behind that company, but small, and we'll see how it grows. It's obviously done well over the recent past, but one to keep an eye on, I think.
Interesting one indeed. Jordan, thank you for your time today. Always a pleasure. That was your midday markets update with Jordan Toy from Legacy Family Wealth.